Welcome to Markets Now. I'm Michelle Rook with Naomi Blohm, Total Farm Marketing. The livestock futures mixed to lower on Friday, but the grains, we were mixed with the row crops higher and wheat futures lower. And Naomi, soybean meal kind of led the charge. What's pushing that market right now? Is it all weather related? Is it technical, or what's going on?
There's a few things happening in the grain markets right now. So we are concerned about the weather in Brazil. It's been on the drier side, and there's chances of bigger rains coming in October. But if those don't materialize, then the traders are going to get a little bit more excited here and could potentially push prices higher. We're also seeing some export demand pick up. We are seeing the funds exit their short positions into the end of the month and end of the quarter. So a combination of all of those factors has just been pushing that market higher, and corn, beans, and wheat are all trading near some very significant technical resistance levels on daily charts. So it's going to take some additional friendly news to get that market to go higher from here. So focus on some cash sales. There's some good value in front of you. Remember, just about a month and a half ago, we were all thinking that prices were going to continue to just grind lower and lower and lower. So this relief rally that we've seen has really just been a blessing.
It has, for sure. And the soybeans, I think this is the sixth straight week we're going to have a higher weekly close. So in your mind, is the bottom in? And when you bottom the market early like this, what kind of upside is there generally?
Yeah, so definitely, I think we saw an early harvest low for corn, beans this year coming that later part of August. And beans have had about $1 rally so far. So that's just tremendous. And corn has had about a 30-cent rally. So we're watching these resistance levels. On November beans, the number we're watching is 1080. That's significant because it's the 100-day moving average. And on December corn, we're watching 425. Now, if we can have three pieces of friendly news come together, we've got a reason for these markets to go higher. But we need three things to happen. We need a friendly quarterly stocks report. We need the value of the dollar to go down. And we need more bad weather in Brazil, meaning it's got to stay hot and dry there. Now, if those three things can happen, then you got a reason for the funds to want to continue to exit those short positions that they hold on the books. But if we don't get those three things to happen, then we are, again, trading at some significant technical resistance areas on charts. And we might see prices then just ease a little bit lower as we head into October.
So you mentioned the fund short covering, and of course it's end of the month, end of the quarter. And so they probably took some profits. Is there a possibility we get to the first part of the fourth quarter and they say, we're just going to stay pat where we are for a while, or not?
Well, I think that could be a possibility. So what they've done is reduce some of their exposure in the marketplace, getting closer to maybe not an even position, but just taking some of that risk off the table. Perhaps they're going to just sit silently until the U.S. elections are done and just be on the sidelines. That's something else to consider too. And then we're, of course, continuing to keep an eye on U.S. economy and what the next Federal Reserve report might say in terms of the next rate cut in a couple months. So there's a lot of moving parts, of course, geopolitical issues in there as well. So maybe just going to the sidelines might be the safest place to be for the funds in the short term. But we are maybe going to see them come back into commodities now that interest rates are going down. And if there's a weather story to tell in Brazil, because they watch the funds too and the fundamentals. So if there's a story to tell, they'll jump on that. But we need to have all of those pieces of the puzzle fall into place perfectly.
Absolutely. We also, as we said, it's end of the month, end of the quarter on Monday, but we also have quarterly stock small grain summaries coming up there. What does the market need to be able to kind of keep this rally going? What's the market watching for?
Yeah, so we're going to need some kind of a just unforeseen bullish surprise. So that would have to mean that the quarterly stocks figures come in less than traders are anticipating. And it would, in my opinion, have to be quite significantly less, because when you look at ending stocks where they are now versus a year ago, they're bigger. So that's why prices for the past year have been falling lower. So we still are dealing with decent supplies in the United States, potentially decent ending stocks in the United States. There'd have to be some sort of a surprise in there in terms of stronger demand than anticipated, maybe corn exports being stronger. That would be a reason why we could see a friendly surprise on the quarterly stocks report for corn. But we'll see what brings at 11 o'clock Central Time Monday morning.
And of course, harvest is picking up, and at times we do see a little bit of hedge pressure, but we've had kind of a counter seasonal move here Do you expect to see more harvest pressure, or have you expected to, or what's going on there?
Well, I think that the market has really priced in this, in general, bigger crop that's out there. And there's grain that's definitely going to be coming to town. We're probably only a quarter harvested for corn and beans. We'll see what the crop progress report says Monday afternoon. So there could be some more harvest pressure to come as more grain comes to town within the next week to 2 weeks. So keep an eye on your cash markets. Some places have had some stronger basis pushes lately, as they're just really anxious to get some grain in before the bulk of harvest gets going. And keep an eye on your basis levels too, along with those technical charts and all of these outside market movements. So remember, just a month and a half ago, we were all so feeling bad for ourselves because prices were low and felt like they could go lower. And corn has had a 30-cent rally. Beans have had a dollar rally. Wheat has had an 80-cent rally. So take advantage of it and get current with cash sales.
Yeah. Just to follow up on corn, you mentioned that we've seen fund short covering there as well. Would corn have been able to go up, though, without the help of the soybean market?
They definitely have been tied together on that South American dry weather issue. That's without a doubt. They've been tied together from that fundamental standpoint. But I think the other part of this too was funds just exiting positions into the end of the month and end of the quarter, helping them to exit those positions, not just to show profits on the books, but now that the Fed actually lowered interest rates. There is definitely a correlation between when interest rates are high, the funds don't participate in commodities quite as much because they can make money easier places with higher interest rates. But now that interest rates are going to start to go lower, maybe we see the funds kind of sneak back into commodities and participate in a little bit more gusto on the aggressive side as buyers if there's a story to tell.
Gotcha. So the wheat market was not able to follow corn and soybeans today, but we do have the report coming up on Monday. So is that the main reason? Or I know when we get up too high, we kind of start getting not competitive, right?
Yeah, absolutely. So Dees Chicago wheat has good support at 575, resistance at $6. And what we're watching right now, we know that the US has a decent crop, but we've also been watching the world wheat situation. You know, some places the crop is okay. And other places we're hearing that it's been on the drier side, like in the Black Sea region. Suddenly the crop in Australia isn't necessarily as perfect as what was thought. So there's a lot of just moving parts to the wheat market also on the production side. But to your point, when the wheat price gets higher, well, here comes Russia who can swoop in and undercut us for pricing. And then the world turns to Russia or the Black Sea region to get the grain. So wheat has to tread a very delicate walk and be price competitive, but also see what's happening around the world because things suddenly aren't perfect. Global wheat ending stocks still, in general, trending lower over the past few years. So we're always just kind of one global production issue away from the wheat market just working higher again, or one geopolitical issue away from wheat working higher again. So definitely something to keep an eye on. So wheat, along with corn, both have inverted or upside down head and shoulders on daily charts, which means if we can see some friendly news, there's technical reasons why that market could go higher. And so the wheat upside, if we find the news, could mean another 75-cent rally. But if the global situations from the geopolitical standpoint or from a weather standpoint end up being simmered down or smooth or no weather issues, then it wouldn't surprise me to see prices then just kind of start to lose some luster and trade maybe just a little bit lower in the shorter term.
Gotcha. So the cattle market, feeders were higher. Live cattle made new highs for the move and then kind of consolidated under those levels. But we had a really strong week for cash trade. Do you anticipate that this market's just going to continue to be able to march higher?
I don't. I feel like what we've had for a recovery rally after the early August price movement lower, we've recovered about 2/3 of that loss. And where we're at right now, like on December live cattle charts, we are back up to resistance. So we're back up to the price point before the fall in August. So from here to go higher for prices, we need exports to pick up. We did not have great exports this week. And then we need to see the consumer demand pick up. And we all know that hamburger and ground beef has been a strong value and the consumer has been wanting that. But now as we start to just kind of, finish out grilling season and look ahead to families saving for the holidays, I don't think we're going to see that domestic demand there. People are still really concerned about their pocketbooks, and I'm a little cautious here. So the story, of course, we've traded that friendly story of tighter supplies here. But when that price gets higher, that's right when we see the imports start to pick up, imports of beef, imports of cattle. And so that makes me just a little cautious and concerned. We're overbought from a technical perspective. And for prices to go higher from here, I mean, it would have to take some really, really fresh demand news or some kind of a shock on the supply side. And I just would be skeptical if we see that. So a lot of producers definitely taking advantage of this recovery bounce and have been doing some additional hedging.
Yeah, that maybe is why we ended off of our highs today in live cattle futures. But do you think even if the cash trade is higher, that's not enough of a catalyst to keep pushing us, huh?
I would be skeptical. It's
Okay.
great, it's wonderful news, but I think we need a little bit more than that.
Gotcha. And the hog market kind of consolidated a little bit here today as well. Do you think that was kind of in reaction to the hogs and pigs report numbers?
Right, because the report, not a lot of friendly news on it, mostly as expected, but what we did see on there is that we've got some heavy hogs coming to market here pretty soon. So we're going to see some big production numbers coming. We're going to see ample supplies in the short term coming to market. So we need to see stronger exports or stronger consumer demand, and the market's starting to just turn a little lower as it had been on about a month and a half rally. So some profit taking starting to kick in. And again, the thought would be sufficient supplies, and then the question is about demand. So maybe we've got to start running some Christmas ham holiday advertisements a little early or something, but we'll see.
All right. Thanks so much, as always. Naomi Blohm with Total Farm Marketing. That's Markets Now.